Hello, my name is Mayanka. I am accounts and a finance trainer from UPLETS. Today, in this class, we will discuss the provision of clubbing. The provision of clubbing, part 1 or previous class. In our previous class, we have discussed section 60 and 61, which are relating to the provision of clubbing. Now, in this class, we will discuss clubbing of income, which is arising to a spouse. Clubbing of the income, which is arising to the spouse. So now we will start our discussion in the respect of such provision. The clubbing provision is also very much important provision of income tax, on the basis of which we will determine whether the income of the other person will be taxable or it will not be taxable in the income of another person. So now in this class we will start our discussion clubbing of income which is arising to his spouse, to his spouse. Number one, income of other person included in an individual total income. The income of other person means the income of his spouse, the income of her spouse will be added or included in the individual total income. So point number one, clubbing of income arising to a spouse. Clubbing of the income arising to a spouse is that if there is a person, his wife earn any income, if his wife earn any income, and whether there is any provision in the respect of clubbing in the respect of such income. So now we will discuss. Number one, income by the way of remuneration from the concern in which the individual has the substantial interest. Is that if there is any person, there is a person, he is a for the example, he is a director of such company. He is a director of such company, and in such company he has the substantial interest, and he has the substantial interest, and in such company his wife is also working, his wife is also working, and he is earning the amount of remuneration, and his wife is also earning the amount of remuneration from such organization. So what will be the treatment, means what will be the provision of clubbing? Section 64 subsection 1 clause 3 is that for the example, Mr. Mohan, Mr. Mohan, he is the director in ABC company. He is the director in ABC company. He is the director in ABC company, and he has substantial right in ABC company. He has substantial rights in ABC company. Now in the ABC company, his wife, means Mohan's wife, for the example, Rita, is also working, is also working, and earn remuneration, and earn remuneration. So in this situation, what will be the provision of clubbing? In this situation, what will be the provision of clubbing? Because there is the substantial interest, because there is the provision of substantial interest is also there. Is that number one, remuneration is received by his wife in cash or in kind from the concern in which the individual have the substantial interest, then such remuneration will be clubbed. Is that when we will calculate the total income of the individual, then such income which is arise directly or indirectly to his spouse, to such individual by the way of salary, by the way of remuneration, by the way of commission, by the way of any fees, whether it is received in cash or it's receiving kind, then it will be included in the total income of such individual. Is it that his wife Rita, his wife Rita earn 6 lakh rupees as salary or as a remuneration, then such 6 lakh rupees will be taxable, or it will be included in the total income of total income of Mohan, because Mr. Mohan, he has the substantial interest in ABC company, because Mr. Mohan, he has the substantial interest in the ABC company. And if there is any individual, he has any substantial interest and in any organization, and his wife or his spouse earn any amount by the way of salary, by the way of remuneration, by the way of fees, by the way of commission, from such entity or from such a organization, in cash or in kind, then such income will be clubbed, in the hands of such individual. Means, as per such example, such a 6 lakh rupees, will be included in the total income of Mr. Mohan, because Mr. Mohan, he has a substantial right and the substantial interest. He has the substantial right and the substantial interest in the ABC Limited, in the ABC company. So when we will computing the total income of such individual, means when we will computing the total income of Mr. Mohan, then all such income, means such a 6 lakh rupees, which is arise directly or indirectly by Mrs. Rita, by the way of salary, by the way of remuneration, then it will be included in the total income of Mr. Mohan. Mr. Mohan. So, number 1 point, remuneration in cash or remuneration in kind to the spouse from a concern in which the individual has the substantial interest. Means, if there is any individual have the substantial interest, then any of the income which is earned by his spouse or her spouse, then it will be taxable or it will be clubbed in the income of such a person, in the income of such individual. So, in computing the total income of any individual, all such income which arise directly or indirectly to the spouse of such individual by the way of salary, by the way of commission, fees, or any other form of remuneration, whether in cash or in kind, from a concern in which such individual has a substantial interest, whether from a concern in which such individual has the substantial interest, shall be included, that it shall be included. So, circumstances when an individual is deemed to have the substantial interest in the concern, means when it will be considered that when it is considered that the Mohan has the substantial interest, when it is considered that when the Mohan has the substantial interest in the company, in the ABC, means when it will be considered that the Mohan has the substantial interest in such organization. So, when where the concern is a company, when the concern is a company, in the case of company, if there is any assessee or if there is any individual hold equity share, 20%, and such equity share hold or carry 20% or more than 20%, more than 20% or 20% voting right, then such person will be considered as substantial interest holder. Is that where the concern is a company if the equity share carrying 20% or more than 20% of voting right are beneficially owned by such person or the party by such person and party by one or more of his relative at any time during the previous year, then such person will be considered as so then it will be considered as such person has the substantial interest in such organization. Is that for the example, Mr. Ram, he is working in XYZ Limited and he has shares, equity, he has equity shares, he has equity shares and he holds 25% voting right. He has 25% voting rights in such organization. So it will be considered as he has substantial interest. he has substantial interest in such organization. He has substantial interest in this organization. In this organization. In the case of company. Or these shares are held by such person and the party by one or more of his relative. Means if the relative the the relative of Ram hold equity share equity shares of XYZ company and it carry and they carry 35% voting rights in XYZ company. In XYZ they have 35% voting rights in XYZ company. So in this situation it will be considered as Ram has substantial interest. Ram has substantial interest. So it will be considered as Ram has substantial interest in the case of such organization, in the case of such company. In any other cases means other than company, if such person is entitled or such person and one or more than of his relative are entitled in the aggregate to receive 20% or more than 20%, 20% or more than 20% profit of such concern at any time during the previous year. Is that in the case of any other concern, in the case of any other means, in the case of AOP, BOY, in the case of partnership firm, LLP, if such person and one or more of his relative is entitled to receive 20% or more than 20% profit, 20% or more than 20% profit of such concern at any time during the previous year, then it will be considered as such person has the substantial interest in such organization. Then it will be considered as such person has the substantial interest in such organization, For the example, there is a person Sham, and he is eligible to earn 25% profit, to earn the 25% profit from a partnership firm. Then he will be considered that he has the substantial interest. Then it will be considered as he has the substantial interest in such organization. In such organization, he has the substantial interest. So, if there is any person, there is any individual who has the substantial interest in any of the organization, in any of the company, and his spouse is earning any amount, whether by the way of commission, by the way of salary, by the way of remuneration, or by the way of any fees, means by any way, then such amount which is earned by his spouse will be taxable, or it will be clubbed in the income or in the total income of such individual. Such income will be taxable, or such income will be clubbed in the name or in the total income of such individual. So these are the circumstances when a person will be considered as that he is substantially interested in such organization. In the case of company, when he or his relatives, when he hold 20% or more than 20% voting right in such company, and or his relatives cumulatively they hold 20% or more than 20% voting right in the company, then such individual will be considered as that he has the substantial interest in such company. And in the case of any other concern other than company, if the person or his relative of such person hold, or they are eligible or they are entitled to take or to receive 20% or more than 20%, 20% or more than 20% profit from such concern, then such person will be considered as that he has a substantial interest in the concern. Then it will be considered that such person has a substantial interest in such organization. So if it is proved that such person has a substantial interest, then the person, then the income which is earned by his wife or her wife will be clubbed in the total income of such individual. Number two, clubbing provision will not apply where remuneration is received on the account of technical and professional qualification. Is that if such amount of remuneration, if such amount of fees, if such amount of salary is earned by the spouse on the account of his on the account of his professional qualification, on the account of his technical qualification, then the provision of clubbing will not be applicable. Then the provision of the clubbing will not be applicable. Just like for the example, Mr. Ram, he is a director, or he he has substantial interest, or he has 25% voting right in ABC ABC Limited. Means he has a substantial interest. His wife also working. His wife is also working in ABC Limited, and earning remuneration, and earning earning the amount of remuneration. The remuneration is 6 lakhs rupees. She is earning the amount of remuneration, and the remuneration is 6 lakh rupees. Okay, the remuneration is 6 lakh. His wife is a professional, means he is a chartered accountant. He is a professional, means he is a chartered accountant, and on the basis of his profession, on the basis of her profession, she is earning such a remuneration 6 lakhs rupees. She is earning such remuneration 6 lakhs rupees. So in this situation, such amount of 6 lakh rupees, it will not be clubbed. It will not be clubbed in the total income of Ram. Means it will be taxable. It will be taxable in the hands of his wife. His wife, means such amount will be taxable only in the hands of his wife, because such income is earned by him by the profession, by the techniques, by the technique. Means she is a professional, and on the basis of this she is earning the amount of income. Then such income will not be clubbed, it will not be included in the total income of Mr. Ram. So the clubbing provision will not be applied where the remuneration is received on the account of, when the amount of remuneration is received on the account of technical or professional qualification, on the account of technical and the professional qualification. Clubbing provision, however, does not apply. The provision of the clubbing will not be applied where the spouse of the said individual, passes technical or professional qualification, and the income to the spouse is only attributable to the application of her or his technical and professional knowledge or experience. In such an event, the income which is arising to his spouse, in this situation, the income arising to such a spouse is to be assessable only in his or her hand. Means such income will not be taxable, or it will not be clubbed in the hands of the individual. It will be taxable only in the hands of his spouse or her spouse. So if there is any income, if there is any amount of any income which is earned by his spouse, in which organization the his spouse is has the substantial interest and the income earned by the spouse from his professional qualification, from his technical qualification, then such income will not be clubbed in the hands of individual, means it will not be clubbed in the hands of Mr. Ram, it will be taxable in the hands of his wife only. So the provision of clubbing will not be applicable here. Next, both husband and wife have substantial interest in the concern. When both husband as well as wife both have the substantial interest in the concern and they are receiving the amount by the way of salary or by the way of remuneration, by the way of remuneration, then in this situation the income will be included in the hands of that spouse whose total income exceeding the income is higher, means excluding such income is higher. Is that for the example Mr. Mohan and his wife Rita both are working in XYZ Limited. They are working in XYZ Limited and both have substantial interest in XYZ Limited. Both have the substantial interest in XYZ Limited. And Mohan earn 75,000 rupees per month as a salary, and earn 80,000 rupees per month as salary. Mohan earned 75,000 rupees as salary and Rita earned 80,000 rupees as the amount of salary. So in this situation, the income is more, whose income is higher? Rita, because she will earn 80,000 into 12 means 9 lakh. Sorry, it is a 80,000 rupees. So 9,60,000. So the total income which is earned by the Rita from such organization by the way of salary is 9,60,000 and earned by Mohan is 75,000 into 12 means 9 lakh. So in this situation, the income is higher of Rita. So the provision of clubbing will be applicable, means such a 9 lakh rupees of Mohan will also be included in the salary of Rita, means the provision of club is applicable. The total income of Mohan, means the income which is earned by the Mohan from such organization will also be included in the total income of Rita. It will be included in the income of Rita. Is that where both husband and wife have substantial interest in any organization and both are in receipt of the income and both are receiving the income by the way of salary. Both are receiving the income from the said concern, then such income will be inclusive in the hands of that spouse. Such income will be inclusive in the hands of that spouse whose total income excluding such income is higher, means she is earning 9,60,000 and she is earning 9 lakh only, and other income of Mohan is 2,50,000 and it is 3,50,000, then the income of Mohan, then the clubbing provision will be applicable, then the income of the Mohan will be clubbed in the total income of Rita, because the total income excluding such income means that other income, total income is 3,50,000. is higher of Rita. It is higher of Rita. So the provision of clubbing will be applicable and the income of Mohan will be taxable. It will be included in the hands of Rita. It will be included in the hands of Rita. Is that such income will be includable in the hands of that spouse whose total income excluding such income is higher. So the higher income is of Rita. Other income is higher of Rita. So the income of Mohan will also be included in the income of Rita. If the Mohan earn other income 2,50,000 and Rita is only 1 lakh, then the provision then according to this the income of Rita will be taxable or it will be included in the total income of Mohan. Means whose income is more, whose income is more, then such income will be clubbed in the hands of the person or the spouse who earn more income, more other income, other than such other than such a particular income, other than such salary, other than such salary. So where both husband and wife have substantial interest in the organization and both are received the amount by the way of commission, sorry, by the way of salary, by the way of commission, by the way of any fees, by the way of any remuneration from the said concern, then such income will be included. Then the income will be inclusible in the hands of that spouse whose total income, excluding such income, is higher. Then the higher is, in this case, Mohan. So the income. So the such income, me such income 9,60,000 of Rita will also be included. It will be included in the hands of. It will be included in the total income of Mohan. It will be included in the total income of Mohan. So the total income of the Mohan will be 21 lakh 10,000 rupees. 21 lakh 10,000 rupees, and the total income of Rita will be only 1 lakh rupees. Only 1 lakh rupees. So this is the provision where both husband as well as wife both are has the substantial interest in the same organization, in the same concern, and they are working in the same organization. Now we will discuss it by the way of example. Now we will discuss a example so that we can properly understand the proper concept. Mr. Arun holds shares. Mr. Arun holds shares carrying 55% voting right in M and O. Mr. Mohan, he holds shares and carrying 55% voting right in M and O Limited. There is a organization M and O in which Mohan has 55%, 55% shares, 55% voting power, voting power. Miss Anamika, wife of Arun, is the wife of Arun. This is Arun. Wife of Arun is the software, computer software programmer. She is a computer software programmer and she earns 35,000 rupees as salary per annum. His wife Anamika, she is working as a computer software programmer and earn 35,000 rupees per month. She is earning 35,000 rupees per month. She has a technical knowledge, means she is technical and she is a professional. She is, however, not qualified. Okay, she is not qualified for the job, means she does not have any technical qualification, she does not have any professional qualification, and she is not qualified for this job. The other income of Mr. Arun and Miss Anamika are 7 lakh 30,000 and 4 lakh 20,000. The Arun's other income, it is 7 lakh 30,000, 7 lakh 30,000, and Anamika's other income, it is 4,20,000 respectively. Compute the gross total income of Arun and Anamika for the assessment year 21 and 22. So as per this question, we are required to calculate the amount of total income in the hands of Arun and Anamika for the assessment year 21 and 22. So Mrs. Anamika, she is earning 35,000 rupees as a salary, means salary income. So salary income of Anamika, salary of Anamika is 35,000 into 35,000, just like that, 35,000 per month into for the period of 12 months, 4,20,000. 4,20,000. 4,20,000 is the salary income which is earned by the Anamika, because Anamika, she is working as a computer software programmer in M&O Limited at the salary of 35,000. She is, however, not qualified for this job. So when she is not qualified for this job, and the spouse and his spouse, sorry, her spouse has the substantial interest in the organization, then such amount of 4,20,000, will be taxable in the hands of Arun. It will be taxable in the hands of Arun. So Arun total income, for the example, it is other incomes, 7,50,000, 7,20,000, sorry, and we will also add club. We will also club the salary of Anamika. It is 4,20,000. 4,20,000 will also be included. It will be clubbed because if there is any individual who has any substantial interest, in any organization, and his spouse or her spouse is working and earning any amount by the way of fees, remuneration, commission, or salary, then such amount will be taxable. Then such amount of fees, remuneration, and salary will be taxable in the hands of such individual. It will be taxable in the hands of such individual. So such a total total income of Arun will be, it will be 11 lakh 40,000, sorry, 11 lakh 40,000. 11 lakh 40,000 is the total income of Arun, and the total income of Anamika will be only other income, which is 4,20,000. 4,20,000. So solution is this: Mr. Arun holds share, it is carrying 25%, sorry, 55% voting right, which is more than 25%, and he has a substantial interest in such organization. His wife is working as a professional, means she is working as a professional, but she is not a professional. His wife is working in the same company without any professional qualification. So by the provision, or according to the provision of clubbing, when the amount of salary which is earned by the Anamika from MNO Limited, it will be clubbed in the hands of, or in the total income of Arun. So the total income of the Arun will be 11,40,000. How? Okay, standard deduction is also there. Minus standard deduction 50,000, less 50,000 is the amount of standard deduction. So standard deduction is also there, means this will be 3,70,000, and 3,70,000 plus 7,30,000. So 11 lakh is the income of Arun, 11 lakh, it will be considered the income of Arun, because the salary which is received by Anamika will be taxable and it will be included in the total income of Arun. So 4,20,000 minus standard deduction means 3,70,000 is the net amount of salary income. Other income of Mr. Arun is 7,30,000. So total 11 lakh will be taxable in the hands of Mr. Arun. It will be means the total income of Mr. Arun is 11 lakh. And the gross total income of Miss Anamika is only 4,20,000. 4,20,000 is the income of Anamika, which is the other income. So, on the basis of such example, we have understand how we will determine whether the income will be clubbed in the hands of a spouse or when it will be taxable in the hands of the assessee. If the Anamika has any technical or the professional qualification, means she is the professional qualification and she earn such amount of remuneration on the basis of such professional qualification, then the income the income means such clubbing provision will not be applicable, and such 3,75,000, sorry, 3,70,000 will not be taxable in the hands of Arun. It will be taxable in the hands of Anamika. She is a professional, if she is a professional or a technical professional, then the income will not be clubbed, then the provision of club will not be applicable. So, on the basis of such discussion, we have understand how we will determine and how we will understand which income and which amount will be clubbed in the hands of assessee or in the hands of individual, means when it will be clubbed and when it will not be clubbed. Now we will discuss another example. Will your answer be differed if Anamika was qualified for this job? Yes. If if Anamika was qualified for this job, then the income 3,70,000 will be considered his own income. It will be taxable in her own name or in own hand. It will not be clubbed in the total income of total income of her husband. So if Anamika has the professional qualification and a technical qualification for this job, then the provision of the club will not be applicable. Then the total income of the Anand is only 7,30,000 other income, and the total income of the Miss Anamika will be salary which is received less standard deduction, means 3,70,000 plus 4,20,000 other income. So 7,90,000 will be considered the total income of Anamika. Total income of Anamika. Now we will discuss next provision. Section 64, subsection 1, clause 4. Section 64, subsection 1, clause 4. Income arising to the spouse from an asset. Income which is arising to an spouse from an asset which is transferred without the adequate consideration. Is that when there is any person he transferred his assets to his spouse without any adequate consideration, and the income is earned from such assets So what will be the provision of clubbing? Means the income arise to the spouse from an asset which is transferred without adequate consideration, for the example there is a Sohan, and he has a house property, and the rent from such house property is 50,000 rupees per month. 50,000 rupees per month. 50,000 rupees per month. And Mr. Sohan transferred such house property to his wife. He transferred his house property to his wife at rupees 50,000 only, means he charged 75,000. He charged 75,000 rupees only, means inadequate consideration. He charged only 75,000 rupees from his wife from his wife, he charged in the consideration of such a house property, in the consideration of such house property. Now the rent is received by his wife. Now his wife will receive the amount of rent of rupees 50,000 rupees per month, means 6 lakhs rupees per annum. 6 lakhs rupees per annum. Now in this situation, such income will be clubbed, it will be clubbed, or it will be taxable only in the hands of, it will be taxable or it will be clubbed in the hands of someone only, because there is the income, there is the transfer of income, and the income is earned from the transferred assets, and in the respect of such transferred assets, the assessee charge vary, the individual charge very less amount, means inadequate consideration. Then such income will be clubbed in the hands of such a assessee, means the transfer of assets other than house property, the transfer of the asset other than house property. When there is a transfer of any asset other than house property, directly or indirectly, from one spouse to another, from one spouse means from husband to his wife or wife to his husband, otherwise than the adequate consideration, or in connection with live apart, or other than condition for live apart. Any income which is arising from the transfer of such a assets, then any of the income which is arising to the transferee spouse from such a transfer assets, then it will be clubbed in the hands of such a transferor, means such income will be taxable in the hands of such a spouse, in the hands of such a spouse, means in the hands of such transferor. For the example, Mr. Ram, he transferred a machine to his wife, at rupees 25,000 only, but the actual value of the assets is 25 lakh. He charged only 25,000. He charged only 25,000 rupees from his wife in the respect of such a machine, in the respect of such a machine. Now Sita, his wife, means the wife of Ram, Sita earned 5,80,000 rupees as income from such a machine. From such machine, she earned the income from such machine is 5,80,000 rupees. So in this situation, such 5,80,000 rupees will be taxable. It will be taxable in the income or in the hands of Ram, not in the hands of his wife. Means such income will be taxable in the hands of Mr. Ram, not his wife, because there is a transfer of such assets at the very less price, means at inadequate price. So in this situation, such income 5,80,000 rupees will be taxable in the hands of the transfer, in the hands of Mr. Ram. It will be clubbed in his total income. If such machine is transferred by Ram to Sita without the agreement of live apart, means there should not be any live apart, or the consideration will be very nil, and the consideration will be very low, means there should not be any adequate consideration, and such a transfer shall be taken place without or not in the connection with live apart, then any income which is arising to the transferee spouse from that transferred assets, it is directly or indirectly, shall be included in the total income of assessee in transfer. So such 5,80,000 rupees will be included. It will be included. It will be added in the total income of Mr. Ram. Other means other than house property, means transfer of any asset other than house property. Transfer of any assets other than house property. Now, transfer of any house property. Transfer of any house property is that if there is any individual, he transfer a house property to his spouse without any adequate consideration. If there is any house property is transferred by the assessee to his wife, or any house property is transferred by the wife to his husband without any consideration or without the connection with an agreement of live apart, then the transferor shall be deemed to be the owner. Then the transferor shall be deemed to be the owner of such property, and the annual value will be taxed in the hands of such transferor. And the value means if there is a Sohan and he has a house property, and he earned the 50,000 rupees per month as the rent from such house property. He transferred such house property to his wife at the very less price. Means in the respect of such a house property, he has charged only 75,000 rupees from his wife. And such a transfer is not taking place in the case of live apart. Means such a transfer is made in normal case. It is in normal case. So in this situation, such property will be considered the property of Mr. Sohan. It will be considered the property of Mr. Sohan, and such 6 lakhs rupees which is received by the way of rent will be clubbed, or it will be added in the total income of Sohan. It will not be included, or it will not be added to the total income of his wife. But if but if such assets, such a house property is transferred, if such house property is transferred, then the 6 lakhs rupees will be taxable in the hands of Sohan. But if Mr. Sohan, he has a transfer a house property. He has transferred a house property in the connection with live apart. In the connection with live apart is that if there is any house property is or any of the assets is transferred by the assessee in the connection with live apart, means Mohan transfer house property in the connection with live apart, in the connection of live apart, then the income and from such house property income is 6 lakhs rupees. Then the 6 lakh rupees will be taxable, or it will be included in the hands of transferee, means his wife. Means such 6 lakhs rupees will not be, now it will not be considered the assets of Mr. Mohan. Now it will be considered the assets of his wife, and the income from such house property will be taxable in the hands of his wife. It will be taxable in the hands of his wife. So in the case when there is any transfer of any house property, the provisions are contained in section 27. In section 27, if the individual transfer a house property, if the individual transfer the house property to his wife or to his spouse without adequate consideration or otherwise than the connection with an agreement of live apart, then the transferor shall be deemed to be the owner of such house property, and the annual value will be taxable in the hands of transferor. But if such house property is transferred, or if any of the asset is transferred in the connection with agreement and agreement of live apart, then the transferee will be the person in whose hand such income will be taxable. Means such 6 lakh rupees will be taxable in the hands of such a transferee, not in the hands of transfer, not in the hands of such transfer. So this is the concept when there is a transfer of house property and other than house property. In the case when the transfer is made by the spouse to another spouse without adequate consideration, or otherwise than live apart. income from accretion of transferred assets. Income from accretion of transferred assets is that it may be noted that if there is any income which is earned from the accretion of transferred assets, if there is any income which is earned from the accretion of transferred assets, then it is not to be clubbed with the income of transfer. Is that if there is any income which is earned by the way of accretion of transfer asset, then such income will not be clubbed in the hands of or in the total income of such a transfer. It will not be considered the total income of transfer. The income arising on the transferred assets along has been clubbed. However, income earned by the investing such income cannot be clubbed. Is that for the example, Mr. Sohan, Mr. Sohan, he transferred 5 lakh rupees. He transferred 5 lakh rupees to his wife. Only to evade or only to reduce his tax liability. Then such 5 lakh rupees used by the 5 lakh rupees is used by, and such 5 lakh rupees then such 5 lakh rupees will be considered, it will be considered as income of Sohan. It will be considered as the income of Sohan. Now his wife invest such 5 lakh rupees in bank and earn interest on 5 lakh. For the example, she earned interest 25,000 rupees. 25,000 rupees. So such a 25,000 rupees will not be considered the income of Sohan. It will be considered the income of his wife. Such an amount, 25,000 rupees, will be considered the income of his wife. It will not be considered the income of Sohan. It will not be considered the income of Mr. Sohan. So, as per the provision, if there is any income from accretion of transferred assets, the transfer asset is a 5 lakh rupees. There is a transfer of 5 lakh, or there is any transfer of any other asset, just like there is a transfer of a machine. And from the transfer of such machine, she earned 5,80,000 rupees. As such 5,80,000 rupees will be taxable in the hands of Mr. Ram. But such 5,80,000 rupees is invested by her in a bank account, and she earned bank interest. On such 5,80,000 rupees. 5,80,000 rupees. Then in this situation, the such amount of interest will be taxable in the hands of his wife, not in the hands of such individual. So it may be noted that any income from the accretion of such transferred assets, it will not be considered the income of such individual, income of such transfer. It will be considered the income of such person, means income of the transfer. The income arising on transferred assets along his clubbed. However, income which is earned by investing such income cannot be clubbed. It will not be clubbed. Means the interest on such investment will not be clubbed in the hands of transfer. Meaning of adequate consideration. What is the meaning of adequate consideration? So it is also to be noted that neutral love and affection do not consider adequate consideration. Therefore, when there is any asset which is transferred without adequate consideration, means without any consideration, or inadequate consideration, then such assets will be clubbed in the hands of transferor. Is that when there is any person, he transfer his assets to his wife, transfer his assets wife to his wife, and and without any consideration, then it will be considered that there is no consideration, there is no adequate consideration, and in this situation such any income which is earned from such house property will be taxable in the hands of transfer. It will be taxable in the hands of transfer. So this is the meaning of adequate consideration. Adequate consideration. Transfer assets invested in the business. Transferred asset invested in the business, when there is any transfer of any assets. When there is any transfer of any assets, and when there is where the assets is transferred by the assessee, directly and indirectly by the assessee, and such asset is transferred by such individual or by such person to his wife, and his wife are invested by the transfer in the business. Such assets is transferred by the individual to his spouse, and such assets is invested by it to the business. Proportionate income arising from such investment is to be included. Proportionate income which is arise from such investment, the proportionate income which is arise from the such investment is to be included in the total income of the transfer. In the total income of the transfer, if the investment is in the nature of contribution of capital, proportionate interest on capital will be clubbed in the hands of or in the income of transferor. Is that there is the transfer of any assets. There is a transfer of any assets, and such a transfer is made by the individual to his wife. It is made by to his wife, and his wife invests such assets in the business. Invest such asset in the business. Proportionate income arising from such investment is to be included in the total income of transferor. It will be included in the total income of transferor. Is that for the example? For the example, Mr. Ram, he has transferred for the example 2,50,000 rupees to Sita. Okay. Now Sita invest 5 lakh rupees in her business. In her business, and earn profit 2 lakh rupees. And the amount of profit 2 lakh rupees means she received 2,50,000 rupees from Ram, and she already have 2,50,000 rupees own. Now total 5 lakh rupees she invested it in the business. She invested such amount in the business. She invested such a amount in the business. Now, after the investment in the business, she earned the profit of rupees 2 lakh rupees. She earned the profit 2 lakh rupees. So in this situation, 2,50,000 receive from Ram, and 2,50,000 rupees her own. Then in this situation, the total profit is 2 lakh. So the 1 lakh rupees taxable and clubbed in the total income of Ram. Total income of Ram, and 1 lakh rupees taxable in the hands of Sita. In the hands of Sita. Means such a 2 lakh rupees means the proportionate profit from such income will be taxable in the hands of transferor. Means the transferor transfer only 2,50,000 rupees, and 2,50,000 she is using from his own. and she invests a total amount of profit 2 lakh rupees. She earned total profit 2 lakh rupees. So in this situation, proportionate amount means such a 2 lakh rupees will be bifurcated into two parts. So 1 lakh rupees, 1 lakh rupees will be taxable in the hands of transfer, and 1 lakh rupees in the hands of transferee, means in the hands of such a Sita. So in this situation, when there is any asset which is transferred directly or indirectly by the individual, means by the Ram, to his spouse, to Sita, and Sita invested such amount in his business, and from such business she earned, and from such business she earned the profit, then the proportionate amount of profit, then the proportionate amount of income will be included in the total income of such a transfer. Proportionate amount of income will be included in the total income of such transferor, and the balance amount of income, balance amount of profit will be taxable in the hands of such a transfer. In the hands of such a transfer, only the proportionate income which is relating to the transferred assets is clubbed in the hands of transfer, only in the hands of transfer. Now we will discuss it by the way of example. Mr. Rahul started a proprietorship business. Mr. Rahul, he started a proprietorship business on 1st April 2009. Mr. Rahul, he is started a proprietorship business. He started a proprietorship business on 1st 4 2019 with the capital of 6 lakhs. With the capital of 6 lakhs. He incurred a loss of 3 lakh rupees during the previous year 2019-20. In 2019-20, he bear loss. The amount of loss is 3 lakh rupees. The amount of loss is 3 lakh rupees. The amount of loss is 3 lakh. To overcome the financial position, his wife, Miss Radha, a software engineer, gives a gift of 7 lakh. She means his wife gift 7 lakh rupees on 1st 4 2020, which was immediately invested in his business by Mr. Rao. He earned a profit of 5 lakh rupees during the 20 and 21. During 20 and 21, he earned a profit of rupees 5 lakh. Compute the amount to be clubbed in the hands of Miss Radha for the assessment year 21 and 22. If Miss Radha gave the said money as loan, so what will be the amount to be clubbed? So first we will discuss what amount of the income which will be clubbed in the hands of Radha. Now, first Mr. Rahul invest in a business. It is 6 lakhs rupees. 6 lakhs less loss was 3 lakh rupees. Now the balance is 3 lakh. Means this is the part of Rahul. For the end 2019 and 20. In 2020 and 21, she also invests 7 lakh, which is of his wife, part of his wife. Means she receives such amount from his wife. Now total investment is 10 lakh rupees. Total investment is 10 lakh. Total investment is 10 lakh rupees. Now she or Mr. Rahul earned profit. Mr. Rahul earned profit of rupees 5 lakh. Now such 5 lakh rupees will be divided into two parts. Means 3 lakh rupees of Rahul and 7 lakh rupees of his wife. Means such 5 lakh rupees will be bifurcated in 3:7. It will be bifurcated, it will be divided, it will be bifurcated, or it will be divided into two parts. Number one is the part of Mr. Rahul and the part of his wife. The part of Mr. Rahul and the part of his wife. Part of his wife. So in this situation, such 5 lakh rupees will be divided into two parts. Means how? 5 lakh divided by 10 into 3, and 5 lakh divided by 10 into 7, 35. Means the income which will be taxable in the hands of Rahul is 1,50,000, and the amount of the income which will be clubbed in the hands of his wife will be 3,50,000. 3,50,000 will be clubbed in the hands of Miss Radha. Is that section 64 subsection 1 clause 4 of the Income Tax Act 1961 provides for the clubbing of income in the hands of individual. Clubbing of income in the hands of individual if the income earned is from the assets other than house property, and such assets is transferred directly and indirectly to the spouse of an individual other than adequate consideration, and otherwise than the agreement of live apart. In such case, Mr. Rahul received a gift 7 lakh rupees on 1st April 2020 from his wife. Mr. Radha, she is invested, means such amount is invested by Mr. Rahul in his business. And the income or the profit which is earned from the business is 5 lakh rupees. So what amount will be clubbed in the hands of Radha? So it will be capital as on 1st April 2020 is 3 lakh rupees. This one 3 lakh rupees. And contribution by Radha 7 lakh rupees. Total is 10 lakh. So the portion 1,50,000, it will be taxable in the hands of Rahul, and 3,50,000 will be taxable in the hands of Radha. Means the income to be clubbed in the hands of Radha is 3,50,000. Such a 3,50,000 will be clubbed in the hands of Radha. It will be clubbed in the hands of Radha. In case Radha give the said amount of 7 lakh rupees as the bona fide loan. If she gives such a 7 lakh rupees as a loan, then the clubbing provision will not be attract. Because if she is providing the loan as a loan, then she will receive the amount of interest on the consideration of such a loan. In the consideration of such a loan, then the provision of the clubbing will not be applicable. Note, the provision of said section 56 subsection 2 clause 10 would not be attracted in the hands of Mr. Rao. It would not be attracted in the hands of Mr. Rao, since he has received a sum of money exceeding 50,000 rupees without the consideration. Then the provision of gift will not be applicable here, because if there is any individual, he has received any amount from his relative up to rupees 50,000 rupees, then the provision of gift will be applicable and it will not be considered as income. But in this situation, he has received 7 lakh rupees without any consideration, then the provision of section 56 subsection 2 clause 10, provision of gift, would not be attracted here. Now we will discuss the transfer of assets for the benefit of spouse. When there is any transfer of assets which is made by the individual for the benefit of his spouse, when there is any assets is transferred by the spouse to his wife, means there is any transfer of assets by the individual to his wife. So what will be the provision of clubbing? Section 64 subsection 1 clause 7. So all income which are earned from such assets, whether directly or indirectly, whether directly and indirectly, then it will be included in the total income of assessee, total income of transfer. Is that Mr. Sona, Mr. Sona, she transferred, she transferred 5 lakh rupees to to her husband, to her husband, and husband husband use it for other activity, and earn 1 lakh rupees as profit. Then such 1 lakh rupees will be taxable in the hands of Sona. 1 lakh rupees taxable in the hands of Sona. Is that all income arising directly or indirectly? If any of the income which is earned directly or indirectly to any person or association of the person from the asset which is transferred directly or indirectly to such person or association of person by an individual without any consideration, then such income will be directly or indirectly included in the income of transfer. It will be included in the income of transfer to the extent such income is used by the transferee for the intermediate or deferred benefit of transfer spouse. Is that there is a organization, means first there is a assessee, means there is a transferor Ram. He transferred a assets, to a organization or to a trust, and such a trust will provide benefits to his wife. Such a trust will provide the benefits to his wife, just like that. All income arising directly or indirectly to any person or association of person from the assets which is transferred directly or indirectly to such person or association of the person by an individual without any consideration is inclusive in the hands of such a transfer to the extent such income is used by the transferee for the immediate or deferred benefit of the transfer, means to the extent of benefits, and the trust will provide the benefit to the spouse up to rupees 50,000 per month, means such a trust will use such property, use such assets, and earn the income from such assets, and the trust will provide 50,000 rupees as benefit to his wife, then the income up to 50,000 rupees per month, the income up to 50,000 rupees per month will be clubbed in the hands of Ram. It will be clubbed in the, or it will be added in the total income of Ram. So when there is any asset which is transferred by the individual to any person or to the association of the person for the benefit of any individual, for the benefit of his wife, or for the benefit of any person, for the benefit of transfer wife or transfer spouse. So in this situation, the benefit, the income or the amount up to the or to the extent of benefit will be added, or it will be clubbed in the hands of, it will be clubbed in the hands of such a transfer. It will be clubbed in the hands of such a transfer. So amount up to rupees 50,000. The benefit, the amount of benefit is 50,000. So the 50,000 will be, it will be clubbed. It will be clubbed in the hands of Ram. It will be clubbed in the hands of Ram, means in the hands of transfer. Clubbing of income arising to son's wife. Now we will discuss the provision of clubbing when the income which is arising to the son's wife, means daughter-in-law. What will be the provision of club in the respect of the income of son's wife? Number one, income arising to son's wife from the assets transferred without consideration by the father-in-law or mother-in-law. Means if the father-in-law or the mother-in-law transfer any assets to his son's wife, without adequate consideration, without any adequate consideration, then what will be the provision of club? What will be the provision of clubbing? Section 64 subsection 1 clause 6 is that, for the example, there is a assessee and the name is Roma, and the father-in-law of Roma transferred a assets to Roma, and Roma earned 50,000 rupees per month from such assets. She is earning 50,000 rupees from such assets, and such assets is transferred without adequate consideration. Such assets is transferred to Roma without any consideration. So the Roma earned 50,000 rupees per month from such assets. So what will be the provision of clubbing? Means whether such income 50,000 rupees per month will be taxable in the hands of Roma or it will be clubbed. So now we will discuss assets transfer without adequate consideration. When there is any asset which is transferred by the father-in-law or by the mother-in-law to the son-in-law, means to son's wife, without any consideration, without adequate consideration, then the income which is arise from such assets will be included and it will be clubbed in the total income of transferor. Then such 50,000 rupees will be included in the income of transfer. Means it will be taxable in the hands of father-in-law. It will be included in the income of father-in-law. It will be included in the income of father-in-law. So when there is any transfer of any capital assets without any consideration, when there is any transfer of assets to son's wife by the father-in-law or by the mother-in-law without any consideration, and any of the income is earned by the son's wife from such assets, then such income will be taxable in the hands of transfer. It will be taxable in the hands of transfer. Assets transfer invested in the business. If there is any assets which is transferred by the father-in-law or by the mother-in-law to the son's wife, and son's wife invested such assets in her business, then the proportionate amount of income which is arising from such investment will be clubbed in the hands of transfer. Is that the same provision? Means just like that. Is that, for the example, the father-in-law of Roma For example, the father-in-law of Roma, she received she received 5 lakh rupees from father-in-law, and she invest in business 10 lakh, means 5 from his father-in-law or 5 her own. She earned profit she earned profit 2,50,000 from such investment or from such business. Now such a 2,50,000 rupees will be bifurcate. It will be proportionately bifurcate between. It will be bifurcate. It will be bifurcate between Roma and her father-in-law. So in this situation, such 2,50,000 rupees is the amount of profit will be bifurcate. How? It is 2,50,000. Total investment by is it 10 lakh into part of his father-in-law is 5, means 1,25,000, and the same 2,50,000 into 10 into 5 lakh divided by 10 lakh. So this is the part of Roma and this is the part of father-in-law. Means such 1,25,000 will be clubbed in the income of father-in-law because such amount of profit is relating to his amount which is contributed by him, and such 2 lakh and such 1,25,000 will be taxable in the hands of Roma because this is the part of which investment which is invested by her from his own source, So if there is any amount, which is transferred by which is given by the father-in-law and the mother-in-law to son's wife, and son's wife invest such amount, and son's wife invest such amount in his business, in her business, and she earned the amount of profit from such investment, then such amount will be proportionately bifurcate into part, means the proportion amount of the profit which is earned from the father-in-law's assets will be clubbed in the hands of such a father-in-law. It will be clubbed in the hands of father-in-law. And the balance profit will be taxable in the hands of such a person. If the investment is in the nature of contribution of capital, then the proportionate interest will be clubbed in the hands of transferor. If such a 5 lakh rupees, means such 10 lakh rupees are invested as the capital, just like as a partnership capital, and on such capital she will receive interest, then the proportionate interest will be taxable in the hands of such father. Means if she received 1 lakh amount of interest, then 50,000 interest will be taxable in the hands of father-in-law, and 50,000 will be taxable in the hands of Rome. Now we will discuss transfer of assets for the benefit of son's wife. When there is any assets which is transferred by the mother-in-law, by the father-in-law to any person or to any association of person for the son's wife. So in this situation, that the amount of profit to the extent of benefit, to the extent of immediate or deferred benefit, will be clubbed in the hands of such father-in-law, such mother-in-law. is that any income or all the income arising directly or indirectly to any person or association of person from the assets transfer, directly or indirectly, without consideration, without adequate consideration to any person or to the association of person by the individual, then it will be included in the total income of such individual to the extent such income is used by the transferee for the immediate or deferred benefit of the transferor's son's wife, to the extent of transferor's son's wife. Just like for the example, Mr. Rohan, he, Mr. Rohan, he is the father-in-law, father-in-law he is the father-in-law of Priya. He is the father-in-law of Priya. Rohan transferred a assets to a trust, and such a trust provide the benefits to Priya up to rupees 75,000, up to rupees 75,000 rupees. And the assets which is transferred by Rohan is used by the trust for the purpose of his work, means for the purpose of his business, and they are also generating the income from such assets. So the income up to 75,000 rupees means such 75,000 rupees which is given as benefit, which is given as benefit by the trust to the Priya will be, such 75,000 rupees will be clubbed in the total income of Rohan. Such income will be taxable, such income will be included, or it will be clubbed in the income of Rohan. It will be clubbed in the income of Rohan, not in the income of Priya. It will be included in the income of Rohan. All income arising directly and indirectly to any person or the association of person from the assets transferred directly or indirectly without adequate consideration to such person or the association of person by an individual with an included in the total income of the assessee or of the individual to the extent such income to be used, the income which is to be used by the transferee, for the immediate or deferred benefit of the transferor's wife, the transferor son's wife. So the amount which will be available or which will be used for the benefit of transferor, will be added, or it will be clubbed in the hands of such a father, Now we will discuss it by the way of example. For the example, Komal transferred her immovable property to TPS Company Limited, subject to the condition that the rental income of rupees 42,000 rupees per month per annum shall be utilized for the benefit of her son's wife. So in this situation, Mrs. Komal claimed that the amount of income 42,000 should not be included in her total income, as she no longer owner of the property. So examine whether she is correct. So according to the provision of Income Tax Act, when there is any mother-in-law or there is any father-in-law which is transfer any assets to any person or to the association of person, and the income from such property to the extent of benefit which are provided by such person or provided by such association to the son's wife, to his or her son's wife, then such up to the amount of such benefit will be clubbed, it will be clubbed in the total income of such father-in-law or such mother-in-law. So in this situation, the mother-in-law Kumal transfer a immovable property to TPS and company, subject to the condition that the rent of 42,000 rupees will be used for the benefit of son's wife. And she is saying such income no need to be included, means such income need not be required to club in my income, because now I am not the owner of such property. So as per the provision of this, she is not right. She is not valid because the amount up to the extent of benefit to the son's wife will be included, it will be clubbed in the hands of mother-in-law. So the clubbing provision under section 46 subsection 1 clause 8 are attracted in case of transfer of any asset, in case when there is any transfer of any assets directly or indirectly, otherwise then for consideration to any person to the extent of which the income from such assets, the income from such assets for the immediate or deferred benefit to his son's wife, then such income shall be included, in the total income of such a transfer. It will be included in the total income of transfer. So such 40,000 rupees, will be chargeable to tax in the hands of Komal, means these amount 40,000 rupees will be taxable in the hands of Komal, Hence the word which is explained by the Komal that she is not liable to make the payment of tax, means such income will not be included in the total income of her, is not valid. It is not valid. Means the condition of Miss Komal is not valid in law. It is not valid in law. Such 42,000 rupees will be added and it will be clubbed in the total income of Komal. And the Komal is liable to make the payment of tax on such amount. So on the basis of such example, we have understand how we will determine whether the income is required to be clubbed in the hands of transferor or not, and how much income is required to be clubbed. Clubbing of minors income. Clubbing of minors income is that if there is a person, means there is a Sohan, Mr. Sohan, and he has a son. He has a son. He earn 15,000 rupees. He earned 15,000 rupees. So what will be the provision of clubbing in the respect of son, in the respect of son's income? Because he is minor, and he will not file his income tax return. Or he will not consider it has at total income. So what will be the provision of clubbing in the case of minors, income? So all the minors income is to be included in the income of his parent. Means such 15,000 rupees will be included in the total income of Sohan or his wife. However, the income derived by the minor from the manual work or from any activity which is involving the skills, talent, specialization, knowledge, or experience will not be included in the income of his parent. Is that if Mr. Sohan's son earns such 50,000 rupees from his technical knowledge, technical knowledge, from his technical knowledge or from his any skills, from his any skills or from his any technical knowledge, from his technical knowledge, then such a such a 15,000 will not be clubbed. It will not be clubbed. Then the provision of club will not be applicable. The income of the minor child or the minor person will be included in the income of the parent whose total income is greater, whose total income is greater. For the example, the Sohan's total income is, for the example, it is a 8,50,000, and Sohan wife's wife total income is, for the example, 7 lakh. So such 15,000 of Sohan's son will be added in Sohan because the Sohan income is greater in comparison to his wife. In comparison to his wife, his income is greater. So such 15,000 rupees will be added. It will be added in the income of his own, in the income of his own. If for the example, the income is 5,50,000, then such income 15,000 will be added in the total income of, or in the total income of Sohan's wife. It will be added in the total income of Sohan's wife, total income of Sohan's wife. Number 4, once the clubbing of minors income is done, once the clubbing of minors income is done with that of one parent, it will be continue to be clubbed that with that parent only in the consequent year. Means in the financial year, in the previous year 2018-19, the Sohan's income is clubbed in the Sohan's wife income. Then it will be continue for the subsequent years. For the subsequent year, it will be carry forward, means it will be taxable in the income of Sohan's wife. It will be, means first it is clubbed in any one of parent, then subsequent year it is clubbed in such person only, such person only. The assessing officer may, however, club the minus income with that of the other person if, after giving the other parents an opportunity to be heard, he is satisfied that it is necessary to do so. If the such assessee explained that now the income is required to be included in my total income because it is necessary, and if the assessing officer is satisfied that he is correct, now such income is required to be clubbed in his income or in his another person income, means another parent. Then if he is satisfied, then the AO he will allow that now the son's income can be clubbed in the income of Suhan, not in the income of his wife. So all the income of the minor child to be included in the parent, in the income of parent, except those income which are earned by the such a son or such a minor from his special knowledge, from his technical knowledge, from his skills, from his talent. Just like there are many children who are working as a ambassador and who are working in dance shows, and they earn the amount of income. And there are many children who are working as anchor in the different shows and earning the income. So they are earning these income on the basis of their talent, on the basis of their skills. So the income which is earned by them will not be clubbed in the income of their parents, and the income will be clubbed in the income of those parents whose income is higher, whose income is greater, once the clubbing of the minor income is done, then it will be carry forward, means in the subsequent year it will be clubbed in the same person. If assessee wants to change it, then he will explain, or he will provide the opportunity, he will give the reason, and the AO will give the opportunity to being heard. If the AO satisfied that, then the clubbing can be changed. Next, where the marriage of the parent does not subsist, the income of the minor will be inclusive in the income of that parents who maintain the minor. Who maintain the minor is that Mr. Sohan and Sohan's wife. Now they are not living with each other. Now they are not with each other. The in this situation, his son, the son is take care by the Sohan. Means Sohan, he is take caring his son. So the income option will be clubbed. It will be clubbed in the income of Sohan. It will be clubbed in the income of Sohan. It will be clubbed in the income of Sohan. So it will be clubbed in the income of Sohan. If there is an liver part or there is the separation between husband and wife, and who will take care the minor, then the income will be taxable, or income will be clubbed in the hands of such a take cared person. However, the income of the minor child is suffering from any disability. If the minor child is suffering from any disability of the nature which is specified in ATU, shall not be included in the hands of parent but shall be assessed in the hands of child. Is that if there is a minor child and she is suffering from any disease, means for the example he is suffering from cancer, so the income of such minor child will not be clubbed, it will not be included in the hands of his parent, it will be assessed in the hands of his child. It may be noted that the clubbing provision are attracted even in the respect of income of minor married daughter. Means such provision will also applicable in the case of minor married daughter. She is minor but she is married, but the provision will be applicable because she is minor. So on the basis of this, now we will calculate. The taxable income. Means we will discuss an example, and on the basis of such example, we will understand how the provision of the clubbing in the case of minor child is applicable. Mr. Arvind, he has 3 children. Mr. Arvind, he has 3 children. Okay. 2 twins daughter and 1 son. Income of twins daughter is 2,500 per annum each. Two daughters, and the income is 2,500 per annum each. Means 5,000 rupees. And that of the son 1,200 and son 1,200 per annum. It is per annum. Compute the income in the respect of minor children to be clubbed in the hands of Arvind. So the income which will be taxable in the hands of Arvind. So first 2 daughters, it is 2,500 into 2 into 2, 5,000 less exempted. It is 1,500 into 2 means 3,000 is equal to 15 into 2, 3,000. In the respect of daughters, 2,000 rupees will be taxable. In the respect of daughter, 2,000 will be taxable. And in the respect of son, the son's income is 1,200 and less exempted Exempted will be 200 because the exemption is a 1,500 rupees per children. 1,500 rupees per child. Per child. So the taxable income or clubbed income, it will be only 2,000. This plus this, only 2,000. So the income to be clubbed in the hands of one will is 2,000 only. Because as per the section 10, subsection 32, there is the exemption of rupees 1,500 rupees each minor. 1,500 rupees each minor. Each minor. So in this situation, there are two daughters, and in the respect of two daughters, the income is more than 1,500. So the balance 1,000 per 1,000 per daughter will be taxable. It will be clubbed. So the 2,000, and in the respect of his son, there is only 1,200, which is less than 1,500. So the total will be accepted. So only 2,000 rupees. Only 2,000 rupees will be clubbed. So the income which will be taxable. So the income which will be taxable in the hands of Arvind is 2,000 only. So on the basis of such discussion, we have prepared, or sorry, we have discussed the provision of clubbing part 2. Thank you so much for watching this video. Okay, bye bye and have a nice day.